Hello, and welcome to your benefits orientation video. This is for locations Phoenix, Battle Creek, and Kentucky. This will be a benefit overview. So let's talk benefits. As you'll see, big on the screen is a benefits@peckham.org email. This is the email address that you can send any questions that you have that are benefits related to our HR team. We have multiple members that will be able to address those questions and point you in the right direction if they are not able to assist you with it. What we'll be covering today is our health and welfare benefit, retirement, medical, dental vision, basic life, voluntary life, and our short-term disability benefit. So when can you enroll? As a new hire, full-time employees are eligible for benefits. You have 28 days from your hire date to enroll in these benefits. And a full-time employee is somebody who is maintaining 30 hours or more per week, and they are aware that they are full-time status and not part-time. Open enrollment is another opportunity to sign up for benefits. This will happen in October, with changes becoming effective on January 1st of the following year. And there is also qualifying events that will let you pick up and drop benefits as well. And you have 31 days to make these changes from that qualifying event. So qualifying event examples, there's a few listed on the screen here. A loss of coverage, so if you're covered through the state or a parent, birth of a new baby, or marriage. There's actually a long list of qualifying events. So if you do have something going on in your life and you're not sure if maybe you could sign up for benefits or potentially drop some, please reach out to the benefits team at that benefits@peckham.org email, and we'll be able to assist you with any questions regarding that. So I do want to reiterate that with benefits, when you do sign up for the benefits, if you elect any, you will have those benefits and will not be able to drop them unless you do have a qualifying event. So if you sign up for the medical, dental, vision, maybe all the benefits that we offer, and maybe 6 months in you decide that you're really not using the dental and vision, unfortunately, you will not be able to just drop those. You will have to wait until open enrollment or if you have a qualifying event. So I'll start with the health and welfare benefit. Your SCA contract allows you to be eligible to receive a health and welfare benefit. The primary purpose of this is to help subsidize any cost of benefits that you elect. There's some examples listed here below. The first one shows if you work 80 hours per pay period. So at Peckham, we get paid every 2 weeks. So this person here is working 40 hours a week. And you'll see the $4.22. That's how much the health and welfare benefit awards you per hour. So this person who worked the 80 hours in that pay period, you times that by the 422, and that will equal $337.60. This is actually the maximum amount of health and welfare benefit that you can receive, because any hours over 40 do not count towards that. So if you are working overtime, maybe work 50 hours in that week, only the first 40 are going to have the 422 added to it for that health and welfare benefit. And then you'll see there's another example working 60 hours per pay period. So this person worked 30 hours per week. And again, you do the math times the 422 an hour, and you get $253.20. So this is something where I recommend to people do the math somewhere around the 35 hours. Just in case you do have a fluctuation in hours, you'll see that the health and welfare benefit does go up and down. So you'll want to be aware of that when you are electing benefits. Your health and welfare benefit is considered a taxable earning. So here we have additional examples of what this health and welfare could look like when signing up for our medical insurances. So you'll see on the left here, we have 60 hours. So this person works 60 hours in that pay period times the 422 for the health and welfare benefit, and that gives them $253.20. So you'll see that this employee is trying to sign up for the traditional medical insurance, and they worked that 60 hours in that pay period. So you do the math there, and you'll see that they end up owing $169.06 out of pocket for that traditional medical insurance. Now, the example to the right, this person worked 80 hours in that pay period. So they have the maximum health and welfare, which is the $337.60. And you'll see that they would like to sign up for the major medical, and that will leave them owing $84.66 out of pocket for that medical insurance. So you will see the difference between these two medical insurances here in a moment, but I just want you to note on when signing up for these benefits, you can see that the health and welfare does cover a significant amount of these medical insurances. However, in each example, they did end up having to pay out of pocket still for this medical insurance. All right, so we'll jump into the medical insurances that are offered. I will start with the traditional plan on the left, and you'll see that there is an employee cost, and that is going to be per paycheck. So for employee, that's $422.26, and you'll see that it does increase for two-person and family coverage as well. So out of your paycheck, you'll be paying the $422.26. But remember, you do have the health and welfare benefit. So if you are getting the maximum amount of the health and welfare benefit, it does cover a significant amount of that traditional plan cost. This has a $0 deductible. It does have co-pays. So you'll see there's a $30 office copay. Urgent care is $50. ER is $150. And then they do have virtual office visits as well. And that has a $0 copay. The co-insurance, so with this plan, it pays 100% in network as long as it, again, is in network and covered under the plan. And it does have a out-of-pocket maximum of $600 for employee only and $1,200 for two-person or family coverage. On the next plan, major medical, you'll see that the cost for that for employee only is $382.45. And the cost does go up for two-person and family coverage. With this plan, it does have a deductible of $500 for individual and $1,000 for family. It does also have the co-pays, $30 office copay visit. Urgent care is $50. ER is $150, and the virtual visit is a $0 copay. There is a co-insurance for this plan. So what that means is you will have to hit your deductible first before the co-insurance kicks in. So if you go to an office visit and they end up doing a little bit extra, order labs for you or something of that nature, any extra charges would go towards your deductible. So once you hit that $500 deductible, co-insurance is going to kick in and they will pay 80% of whatever's owed. So you are responsible for the other 20%. So if you have something like a major surgery, let's say that surgery is $1,000, you will have to pay the $500 up front for that deductible, and then the additional $500 that is owed, you will only be responsible for 20% of that. This does have a out-of-pocket maximum as well, and that is $2,000. So when you reach the $2,000, so any out-of-pocket maximum, when you reach that, then your services will be covered at 100% as long as they are in network and covered under the plan. There is a prescription drug plan as well. So pharmacy, there's a 34-day supply. Generics would be $15 and brand name would be $50. And there's a mail-in service or retail. So you'd have to speak to your doctor about potentially getting a 90-day supply. And generics would cost you $30 and brand name would cost you $50. So there is a bit of a savings there. Here's an example of somebody who is working 60 hours in a pay period, and you can see their health and welfare subsidy there, the $253.60. So this person would like to sign up for the traditional plan, which is the $422.26, and they would also like to sign up for the dental and vision, which we'll cover here shortly. So you will see that they end up having to pay out of pocket $185.55 to be able to have the traditional medical as well as the dental vision. And here is our last medical option for you, and it is a health savings plan. So you'll see the cost here is $309.28 for single employee, and then it does increase for two-person and family coverage. This plan is considered a high deductible plan, so you'll see here that the deductible for employee only is $2,000, and then for family coverage, two-person or family coverage is $4,000, and that's in network. And this has to be met and paid first. So any sort of visit that you have, if you're going to the doctor, going to the emergency room, going to urgent care, getting prescriptions, anything medically related, you will have to pay the full cost until this $2,000 deductible is hit. So the copays, after you hit the deductible, there will be no copays that you have to pay. It's going to be covered at 100%. There are virtual visits, and it will cost $59 before you hit the deductible. So if you would like to do a virtual visit with your doctor, it's going to be $59. After you hit that $2,000 deductible, it will be covered at 100%. Coinsurance is also going to be 100%, but that's after you hit that $2,000 deductible. There is a out-of-pocket maximum as well of $3,000. So this plan, again, high deductible plan, any sort of medical procedure or visit that you have, you're going to have to pay in full until you hit that $2,000 deductible. After that, all medical type procedures and visits will be covered at 100%, as long as they are in network and covered under the plan. There is a health savings account that is an option with this plan. So with the health savings plan, if you choose that option, you will be given a health savings account that you can contribute money into. The purpose of this plan is maybe designed around somebody who doesn't visit the doctor very frequently, and they're able to utilize that health savings account where they can contribute money into that. So pre-tax dollars into this HSA, where they are able to build up money. It does roll over from year to year, and you're able to keep that money. It is your health savings account, even if you leave Peckham. So you contribute money to that, and in theory, you want to build up $2,000 into that account. So if you do have a major surgery or something that happens, you would have the money in that health savings account to help pay towards that $2,000 deductible. You may also use that health savings account to pay for medical type procedures or prescriptions. They will give you a debit card to be able to use to do that. And there is a prescription drug plan with this HSA, with the HSA and the health savings plan. So there is a generic copay of $10, preferred $40, and $80 for specialty. And that is going to be after the deductible is met and paid. So if we go back and look at this, you have to hit the $2,000 deductible, and then you will be able to get your prescriptions for these copay amounts. Prior to that, when you still have to pay towards this deductible, you will be paying the full cost for your prescriptions. And the out-of-pocket maximum, once you hit that, so an extra the $2,000 deductible does go towards that out-of-pocket maximum, so you have to pay another $1,000 towards it, and that would come from these prescription copays. Once you hit that $1,000 in prescription copays, then they would be covered at 100% under the plan. So we'll go over health and welfare benefit again. So following your first paycheck, Peckham will create a retirement account on your behalf using the health and welfare funds. So again, if you remember, your benefits do not kick in immediately. It's going to be 28 days, and the following month is when they're going to kick in. So for that, basically a month of you not having benefits, they're going to create that retirement account for you, and you're able to choose if you'd like it to be pre-tax traditional or after-tax Roth. The money is going to go into the account that you choose, and then when your benefits kick in, if you do have anything left over from the health and welfare, then that will be contributed into this retirement account as well. So if you sign up for maybe the health savings plan and just that, and you have some leftover health and welfare, the rest of that is going to go into the retirement account that you chose, either the pre-tax traditional or the after-tax Roth. All right, so I mentioned earlier the virtual visits. You can now qualify to get these virtual visits anywhere using your smartphone or tablet or computer, and there is a $0 copay for traditional and major medical plans, and then there is that $59 copay before your deductible on the health savings plan. After you hit your deductible, these virtual visits would be $0 copay. So it's a great way to get in touch with a physician for any minor or non-emergency situations, such as sinus or respiratory infections, and the list goes on. So if you are someone that maybe get sinus infections every allergy, spring, spring season, then this is a great opportunity for you to see a doctor. You can also talk to your own physician about setting up virtual visits, but it is for minor non-emergency situations. You'll be able to get with a doctor typically a lot quicker than you could see your primary care physician, and they do have a lot of physicians that you can choose from. Next, we'll talk about the dental and vision. So that's going to be Guardian Dental and Davis Vision. The cost is going to be $16.49 per paycheck for employee, and then you'll see the cost goes up for two-person and family coverage. With the dental coverage, exams, cleanings, and bite wing x-rays you can get every 6 months, and that's going to be covered at 100%. And then basic procedures such as fillings or simple extractions, those are going to be covered at 80%. And major procedures such as dentures or single crown, that's going to be covered up to 50%. There is orthodontic care, and that could be covered up to 50% and up to $1,000 maximum lifetime benefit for that. And then there is a $1,000 maximum benefit per calendar year for any sort of dental work that you do have done. For the vision coverage, an eye exam is going to be $10, and you can have those every 12 months. And then glasses or contacts, there is a materials copay of $25, and you can get those every 12 months. There is a $120 allowance on the glasses or contacts, so anything over that $120 you will be responsible for. So if you get designer frames or your contacts are a little bit more, or you get some upgrades to your lenses, any extra costs over that $120 is going to have to come out of pocket. Peckham does offer two life insurance options. The first one is going to be basic life coverage, and that's a $15,000 policy, and that is free to you. You will be able to elect that in our Workday system, and you will be able to add a beneficiary for that as well. And then we do have a voluntary life option, and the prices for this, they do vary. The plans begin at $50,000 and they go up from there. You'll be able to select these options in our Workday system, so you can choose an amount and you'll see what that cost is going to be for you. Now, this is only offered to you as a new hire. And the reason for that is because it is guaranteed coverage. If you've ever tried to sign up for life insurance in the past, they will pull your medical records. If you have any pre-existing conditions, they could deny you that life insurance. However, with this plan, it is guaranteed coverage. Another benefit of this is that the plan is portable. So if you ever do leave Peckham, you're able to take this life insurance with you and you can continue paying through Guardian. So that is why it is only offered as a new hire. So during open enrollment, you will not be able to sign up for the voluntary life options, and you cannot change the amount that you've selected. So do be aware of that. You will, again, have 28 days to enroll in your benefits. So if you decide, you sign up for your benefits right away and then you decide a few days later that you would like to sign up for this, please reach out to the HR team and we can get that changed for you. Our last benefit is our short-term disability. So short-term disability pays 60% of your normal pay while off on an approved claim. Guardian will not pay benefits for the first 7 days of that leave. Once your disability claim is awarded, Guardian will pay you directly by mailing a check. And some claim examples are accidental injury, not work-related, pregnancy or childbirth, and then certain illnesses, diseases, or surgery can be covered under short-term disability. And the cost of this, the rates are based on your wage and your age. So again, in our Workday system, you'll be able to see what that cost is going to be if you would like to elect that. And it is your responsibility to file a short-term disability claim. If you ever do go on a leave for any reason, whether it be FMLA, ADA, personal leave, you will be responsible for submitting this claim. So you will get the information on how to submit that. It's basically contacting Guardian, letting them know you're going on that leave, and then getting in touch with your provider and getting them and Guardian to communicate. Now, with any leave that you are on, you are responsible for your benefit premiums. So if you are electing our medical, dental, vision, voluntary life, and our short-term disability, again, you do have the health and welfare benefit to help subsidize those costs. So you may be used to paying, let's say, $100 out of every paycheck. However, if you do go on a leave, you will be responsible for the full cost of your insurance premiums. The reason for that is because the health and welfare benefit, you only are awarded that when you are working. So it's based on your hours worked. So you will have to pay the full cost. So again, if you elected all of those things, it could be, $500 every pay period that you will have to be paying for those insurances. So short-term disability is a great option to be able to pay for your insurances while you're out on a leave, because typically, on these leaves, you will be seeing a doctor, so you don't want to lose your medical coverage while you're out on a leave. That's where short-term disability can really help you by getting 60% of your normal pay while you're out on this leave to help pay for those medical premiums, insurance premiums, whatever you end up signing up for. So do be aware of that. Again, any questions that you have, you can reach out to the benefits@peckham.org, and you can also talk to your VSS and find out who your HR representative is, and you can ask them directly too if you need a little bit more one-to-one conversation. I thank you for your time and enjoy your day.